hit record to make sure that this is recording. All right, we are good. So April 10th, 7:30 p.m., 8:30 Eastern p.m., a informational webinar on options. The only basic knowledge I'm going to share relative to how options work is as follows. An option trades just like a stock. It has a bid and an ask and a current price. They can be bought and sold exactly the same way as stocks. Buying a call option means you think the stock will rise. Buying a put option means you think the stock will fall. When a stock rises, calls increase in value and puts decrease in value. When a stock falls, puts increase in value and calls decrease in value. So on a day like today, you're looking at a chart of Tesla, which was down 6% today. Tesla calls were decreasing in value. Tesla puts were increasing in value. That's the most basic thing you need to understand going into this webinar. Now, the question I get asked a lot, is it easy to learn and trade options effectively? Now, I want to answer this question by sharing my experience with learning options, how I got into it, because it was 2011, and how I learned, or how I came about learning, was the same way I learned how to trade penny stocks. Really just by somebody mentioning them to me, and then just watching them trade every single day and getting a feel for the way they moved, how quickly they moved, what moves higher typically looked like, what moves lower typically looked like, what volume typically looked like. All of that relevant info. I get all the time, hey, do you have any books I should read or anything? Any videos to watch? I don't. I never read any penny stock books or watched any real videos. God bless people like Camaro who are pumping out video after video. I was never watching that stuff. I just felt that the best way for me to learn is to watch the market every single day. That's what I did then. That's what I do now. In fact, the only thing I ever read, and I didn't finish it, was one of those kind of gimmick books, Stock Trading for Dummies. You know, those 4 dummy books you see at the bookstore, a whole row of them. So when a friend told me he was trading options, like I said, back in 2011, naturally I did the same thing that I did with penny stocks. I just started watching them time and time again. And once I spent time watching them every day for days and days, I realized there was a lot of potential in trading them if you could buy low and sell high. The simple golden rule of any profitable trade. Buy low, sell high, or even buy high, sell higher, you know, whatever you want to do. So later on in my experience with options, and this is where it gets to the more complex part, I started to learn more about what impacts there are on options movement, stuff that's more complicated that I'm not going to touch on, such as Greek symbols like delta and theta and gamma. And without a doubt, you know, spending more time to learn the intricacies of options. So up here in this paragraph, I'm talking about, you know, my experience with what an option did every single day. It went up, it went down. That part to me was easy. I could watch it, I could see it with my own eyes, and I could see quite clearly, hey, if I bought an option low and it went up, I had a chance to sell it at a higher price. If I could get that down, I could be successful at options trading. Later on in my experience, the why came about. You know, I started to wonder, hey, why is the option moving up and down with such velocity the way it is? And that's definitely the more complicated part about options that I've put time in recently to learn more about over the last year. The basic rule, though, like I said, is if a stock is going to drop, puts are going to make money and calls are going to lose money. If a stock is going to rise, calls are going to make money and puts are going to lose money. Little typo there. So from that perspective, in my opinion, it is easy to understand how to trade options and trade them effectively. The reason options are harder than other securities and harder than penny stocks in particular is they can lose value very quickly. And this has to do with the what, such as some of these Greek symbols that impact that value loss. So if you don't honor your stop loss, or you enter your position, or you don't enter your position near your stop loss, aka at support on a long trade or at resistance on a short trade, you can have very big losses. And that's where options, without a doubt, are harder than regular stocks. If you don't understand how critical stop losses are in options trading compared to regular stock trading, then you can get hurt. And what that does, it forces you to be extremely disciplined. Because in penny stocks, maybe you can get away with not honoring your stop on a given day, and, you take the loss later in the week, and maybe it was 25% instead of 15%, but it's still okay, bigger loss than it should have been, but not horrible. That's not how it works with options. Options forces anyone who's trading them to be extremely disciplined. And most people simply don't have that discipline. For a while in 2011, when I first started, I didn't have that discipline. And it's easy to just be lazy and say, I don't really want to spend the time developing that discipline or practice that discipline. And that's what makes options unattractive, is the fact that there's so much discipline required. However, somebody who is disciplined will definitely not find options trading, to be hard. If you practice discipline consistently, then I don't think you'll find options hard. You'll definitely find them more challenging than regular stock trading, but they won't be classified as hard. And to add to that, if you can develop the discipline required for options trading, then to me, you can develop discipline for all types of trading. Now, this next question. How much money do I think you need to be able to trade options? Now, before I answer that directly, I want to point out how much an option costs itself. Options trade in multiples of 100. So, if an option costs $1 to purchase, that means it costs $100 to buy one option, $200 to buy two options, $300 to buy three options, etc. $1 times 100, since that's the multiple options trade by, equals your $100 principal. If an option costs $2, then it costs $200 for every one option purchased. If it's $3, then it costs $300 for every one option purchased. And I'll show you, just so you can see some real examples here and grasp the concept further. We're going to look at Tesla. We're looking at Tesla options right now. For instance, Tesla options, the 200 strike puts for this week cost $1.70. So if they cost $1.70, based on what I just told you, can somebody tell me how much principal that would tie up to spend on a Tesla 200 put at $1.70 per option? Exactly. $170. Good answer. So you guys are already getting it. Now, some stocks have different priced options. Tesla's a $200 stock. I'm going to pull up an option chain of Google, and we're going to continue this just to make sure everybody is understanding how much it costs, because you got to understand how much an option costs first. Would you think that a Google option would cost more in principal or less in principal than Tesla options? Google is a $500 some odd stock, Tesla's a $200 stock. Again, just use the chat room to post your answers. People saying more. Some people saying less. It will cost more. It's just simply Google is a higher price stock, so you can expect the options to be a higher price as well. And if you look at Google, you'll see that, you know, if you get up to be around the same percentage strikes on Google, the 545 puts, for instance, cost $3.90. So how much does that cost in principal? Exactly, $390. Very good. Always remember that you just take whatever number you see in the option chain, so 390, and you simply multiply it by 100. If ever you can't remember, hey, how much does this option actually cost? Just remember that options trade in multiples of 100. So you're always going to multiply the price of the option by 100, and that is how much one option costs. So, moving on. This is why I believe, and when I was starting, options were an easy transition from penny stocks and just to be able to trade penny stocks and options together, because you think about the principles of buying a penny stock. Why do we like buying penny stocks? What attracts us to penny stocks? Inevitably, it's the cheap price. The fact that I can buy 100,000 shares of a stock like RFMK and I only need to spend $400 to own that stock. Okay? So, point being, options aren't that expensive to be able to buy and sell. You can buy an expensive option. For instance, you can see some of these options on Google cost $8 or $9, so that's $800 or $900. You know, it all depends. But you can see that there's more than enough that, you know, cost $300, $200, and then on Tesla I showed you one of them was $170. So options are not expensive. That's the first thing you need to understand. Answering the question directly, how much money I think you need to be able to trade options. I would typically recommend, and I had this conversation with somebody today, that you start out with $2,500 to $5,000 if you're going to start trading options, because that allows you to trade $250 to $500 per order, per trade, but you never have more than 10% of your portfolio at risk. For instance, if you have a $4,000 portfolio, you could buy one of these Google 545 puts for $3.90. You could spend $400 just about on that, and you only have 10% portfolio exposure. It's very, very realistic to be able to start with that type of amount and trade those types of position sizes and still do well for yourself. In fact, and this is especially relevant, so this platform that you see me on right now, it's called TradeStation. And TradeStation has a $25,000 account minimum. All right. Now, I deposited about $26,000 into TradeStation. You can see my value right here. I wanted to give myself a little cushion for losses. Now, because they have a $25,000 minimum, I can't afford to go below $25,000. They'll freeze me out. So I've been trading very small size. I've been trading one contract at a time. I opened this account on April 3rd, last Thursday. Well, I funded it anyway. And I've been trading one contract at a time because I can't afford to take a big loss or a bigger loss than I should and go below $25,000. So that's why I'm keeping my size very small. And I've been able to grow this account modestly over the last week by doing that. And, you know, once I get closer to 27, 28,000 and start backing off of 25,000, I'll increase my size a little bit. But in essence, I'm really only trading $1,000 a day, if that sometimes, because of their regulations and how I've had to make that adjustment. Not an adjustment I'd like to have to make, but the platform is extremely good, so I want to, do what I need to do to stay on board here. Next question that would interest me. What do average gains and average losses look like? I typically see average gains, if you are correct on the movement of a stock, being between 30% and 50%. Average losses, if you are incorrect on the movement of a stock, is 10% to 18%, assuming you're taking your stop loss. However, there is major potential for huge gains and huge losses. On a day like today especially, when the market drops huge, various put options are easily paying out 500 to 1,000%, and I'll show you some of those moves later. However, the other side of that is that various call options, some of them are dropping 90%. So if you're being a dumbass and you're not stopping yourself out when you need to, your 15-20% loss by the end of the day can definitely turn into 90%. And this is what I touched on at the outset. The difficulty with options is understanding that you can't wait around to take your stop loss. That's why, similar to penny stocks, you have to honor that stop loss for the most part. Take RFMK, for example. I was looking at the stock chart, and I saw that it's gone from over a penny to 0.004s recently. When the stock broke above 1 cent, I remember being in the chat room. I was playing it, you were playing it, a lot of people were playing it. And there's inevitably buyers who came in above a penny and got stuck and saw it go back below a penny, but still held on to the stock. There was. Those people didn't honor a stop loss. A sensible stop loss would have been selling RFMK if it went back below 1 cent, right? Well, if someone didn't do that and they're still holding on to RFMK, then they're down 50%. That is a good example of what an option loss can look like. The difference is, like I mentioned earlier, the RFMK loss is 50% over a few sessions now. The option loss, it can equal 50% in a day if you don't honor your stop loss. That's the main difference. But to me, though, the average trader can easily cap option losses between 10 and 20%. And I'll show you some of my gains and losses since I opened the account. So you can see this shows you all of my trades total. All right, you can see my total net profit, again using small size, has been $387. And if you go down and you look at my average losing trade, you'll see my average losing trade is about $36.85. My average winning trade has been about $53. So there's my average loss. Now if you were to look at my average position size over here, you'll see all of my filled prices. And you'll see that my biggest position buy has been $4.40. That was the most I ever spent. So the most I ever spent was $4.40 for one contract. So what's the most principal I've ever had exposed, guys? If the most I spent was $4.40, what's the most principal I've had exposed? Exactly, $440. So if you take that $440 principal, and you look at my average loss here, my average losing trade has been about $36. You can just figure that I've, for the most part, been able to keep my losses at about 10% because I have good discipline. Next question. How easily can I get in and out of an option? Well, presuming you're playing a major stock like Tesla or Netflix or Google, Apple, Facebook, etc., you can get in and out extremely easily. Imagine you're playing the most liquid penny stock every day. That's how liquid options are and how easy it is to get in and out of them. There is no liquidity issues with options. Now, can you pattern day trade options? This is where I think the options is the most appealing, because as long as you don't have a margin account, yes, you can pattern day trade options, but you must have a cash account. It has to be a cash account. Most of you probably have margin because you want your money to clear the same day. Well, with options, you'd want a cash account because the real advantage is that options clear overnight. There is no 3-day settlement period with options. There's no 3-day settlement period with options. So, for instance, if you have a $3,000 cash account, again, this is extremely important. It has to be cash. It can't be margin. Otherwise, you will trigger a pattern day trade rule or whatever. So with that $3,000 cash account, you can make as many round-trip trades in a day up to $3,000. So you could make 10 different trades of $300 each, or 5 different trades of $600 each, or 3 different trades of $1,000 each. Cash accounts allow you to make unlimited trades in a day up to the total dollar amount in the account. Best of all, since options trades clear overnight, all of that same cash would then be available the next trading day. If you have a $3,000 account, you could, in theory, make 30 round-trip trades of $500 each per week. And that's very doable. If you noticed, my trade manager, it showed you I've made 26 trades myself since last Thursday, and I have never used more than $3,000 in principal in a given day. Yes, Big Al, as long as it is cash, it isn't a pattern day trade. Although I'm being unfair, there's other questions I didn't answer, so I need to answer all of them at the end. Please refrain from asking questions until the end. There will be more than enough time for that. I will not leave until every single question is answered. All right, so maybe all this stuff is interesting you and you want to start being able to watch options trade. How can I get approved for options? I'm going to show you guys right now. Most brokers have various levels of options trading. In most cases, you need level 2 options approval. That allows you to buy puts and calls. You don't need an option approval higher than level 2. All you need is whatever one gives you the ability to buy puts and calls. So on E-Trade, what you would do, okay, you just log into your account, and I can only use E-Trade as an example, unfortunately, but I'm sure it's very similar on other brokerages. Log into your account, you go to Forms and Applications right here in the top right-hand corner, click that, and then you would go here where it says Brokerage Account Options Upgrade, and you select Apply Online. You'd click that, and then now this account already has level 2, but you would select level 2. Okay? Now maybe I need level 3. All right, now here's the thing. They will deny you if you don't stretch the truth a little bit. This is my girlfriend's account. We got her level 2 options approval. She is broke. Her annual income is closer to $15,000 to $24,000, more so than $50,000 to $99,000. I'm telling you right now, it's okay to stretch the truth a little bit on these to make sure you get the approval you need. You know, if you applied and you only got level 1, go back and let them know that you inherited a bunch of cash and now your liquid net worth is all of a sudden $200,000 to $500,000. That total net worth is on the rise. We were early investors in the next Facebook, and we're approaching $1 million net worth, and we're good to go. How much experience do I have? I've been trading stocks for a few years. I've been trading options for a couple years. Trades per year, I'm definitely making more than 75. And I agree to this, I agree to this, boom, agree, submit, and I promise you that you will get approved. Okay. Next question. And before I move on though, so again, I only showed E-Trade, but I would assume that any other account, TD Ameritrade kind of works the same way. They probably have an application or an upgrade button, and you click that, and they'll have the different levels. And, you know, do what you got to do to get approved because it's worth it. Next question, the most important one. How often is there a really good move in an option? All right, so to me, there's okay moves, there are good moves, and then there are insane moves. I would guarantee every day there are okay to good moves. It's just a matter of catching them. And every single day at the open, there is surely at least an okay move with, I would say, at least 3 out of the 5 opens per day providing a good move. And the open is definitely when there's the most action, probably very similar to any other stock. You know, penny stocks, I know when I trade them, I'm trading the open the most. So I will show you some trades here. All right, so you can see that on April 3rd, last Thursday, I bought a Tesla call for $3.35 and I sold it for $4.10. I bought it at $9.38. I sold it at $9.43. I held it for 5 minutes. I made 22%. I would classify that as an okay move. The next day, on Friday, I bought an Amazon 335 put at $2.33, and I sold it legit 62 seconds later at $3.45, making 48% in 62 seconds. I'd classify that as a good move. Then on the 7th, April 7th, I bought a Tesla put at $2.20, sold it at $9.46 at $2.44, made 10% holding for 10 minutes. Okay move, not that good. Tuesday, I bought a Apple 520 put at $2.29 at $9.31. I sold it 9 minutes later at $9.40 for a 37% gain at $3.13. I would classify that as a good move. Yesterday, I bought an Amazon 320 put at $1.83 at $9.32. I sold it at $9.39 7 minutes later for a 20% gain at $2.20. I would classify that as an okay move. So these are all real examples where I'm entering trades, you know, you can see within the first few minutes of the open, sometimes within the first 90 seconds, and there has always been a good move, and I've been fortunate, well, at least an okay move, sometimes a good move, and I've been fortunate to be able to catch it. And had I done a better job executing, some of these percentage gains were a lot bigger. So yes, how often is there a really good move in an option? Every day there's a move you can take advantage of, and on a day like today, I'll show you, there were some ridiculous moves as the day played out. All right, so up here in the left-hand corner, and I'm going to show you the good and the bad because I don't want to only show one side here. You're looking at an Amazon 325 put. You're looking at a 5-minute chart of an Amazon 325 put from today. This went from $2 all the way up to $8 throughout the course of the day. Amazon dropped from $330 to $317 for that move to happen. You can see right here, it was up 566%. That's great if you're in the put. If you're in the call and you're one of those idiots that doesn't know how to honor their stop loss, take that 325 call. Take the other side of it. All right? $5 at the open. Look at where this thing closed today. 64 cents. Down 92% on the day today. So that's one of those scary examples I'm talking about where the person who says options trading is hard is the person that doesn't stop themselves out of this 325 call, or the person that maybe they stop themselves out, but then they're too scared to get into the put side of things. Think about a penny stock where maybe you played momentum on MINE, all right, and it was a good trade on a Tuesday, but then on a Wednesday, you got in it and it started going down, so you got out. And then you looked at SPLI that was doing well, I'm just speaking hypothetically, but you never got in it. All right, this is kind of the same thing. You need to be adjusting. And if you don't, you can really get hurt. That's for sure. All right, looking at Netflix with this next chart. Again, same chart from today's price action only. This is a Netflix 330 put. These were down around 20 cents at the open today. They crept up to 60 cents ahead of 12 o'clock. By the end of the day, they had hit a high of $2.60. Overall, making a move on the day of 600%. Okay, 600% move. However, the other side, the call side on Netflix, did disastrous, right? It's down 88%. They opened around $12, the 345 calls. I would never be playing an option that expensive anyway, but just for this example's sake. And they went from $12 to $1 total, okay? So huge loss. And then just to reiterate as well, Google, 555 put. You notice that it was the puts making money today. They went from less than $1 at the open, hitting a high of $10 on the day overall, rising 500%. So today certainly classifies as one of those insane type days. This is not every single day, but it certainly happens. And the thing that's really neat about options is when it happens across the board. The purpose of showing you this, I'm showing you Amazon puts moved 500%. Netflix puts moved 600%. Google puts moved 500%. That's just three of many today. This was happening across the board. It wasn't isolated. It's not like there was only one stock you had to be playing. You could have played any big board stock out there, any liquid big board stock out there, for the most part, was giving this type of movement. Now, the more day-to-day stuff is the examples I showed you, where I was netting 48%, 22%, 37%. That's pretty much expected. If I can have a trade where I'm making 50% every day, at least once a day, then I'm satisfied. A day like today is definitely one of those days where there's major potential if you execute very well to catch a major move on options, but the opportunity is definitely there. And that really wraps things up for what I wanted to go over on my end with you guys. So at this point, I would like to open it up to questions. And then after that, I will turn things over to Max and also just explain to you guys okay, so you're interested in this. What might I be able to do for you where I can help you understand things further and give you some insight into putting what you've heard to practice now. So if you would just use the chat room to post questions that you have. And I will also say, full disclaimer, I trade options every day without knowing everything there is to know about options, right? So I will do my best to answer the questions, but not all questions will be extremely necessary to understand to be able to trade them. So the first question I see is, what's with the pattern day trading with a margin account? So if you have a margin account and you want to trade options, then you will not be able to pattern day trade. As soon as you make 3 round-trip trades in a week, just like with a penny stock, all of your trades would be used for that day. Lambert asks, what is a good broker for option newbies? I would recommend TD Ameritrade. I used to trade on E-Trade myself, but the reason I switched to TradeStation is because E-Trade's platform would freeze on me. Sometimes their level 2s would not accurately display the proper market information. Sometimes orders would get filled hours after I had canceled them. So I am 100% off the E-Trade bandwagon. I will never recommend anybody sign up with them again because I got fucked numerous times using them. So I would recommend TD Ameritrade because I've heard solid things about them. I would recommend TradeStation, but the problem with TradeStation is the $25,000 account minimum, which most people don't want to deal with. But if you can do that, you can be like me. You can put the $25,000 in the account. Doesn't mean you have to trade with $25,000. TradeStation is definitely my new favorite broker. A-Trade asking me, what is the tick value on an option? That is a term I'm not familiar with. Can you paper trade options? Yes, you can certainly paper trade options. I would recommend you paper trade options first before ever doing any legitimate trading. I myself am doing paper trading with more complex strategies that I've learned about, and before I put them to use, I want to make sure that I'm doing a good job paper trading them first. And TD Ameritrade, I believe, offers paper trading as well. Big Al mentioning the point about being a college student. How would you get approved for options trading since you don't have a net worth? Big Al, did you miss the part where I said just go ahead and let them know about your $1 million inheritance? These guys aren't honest with us. Why do we need to be honest with them? Again, this is my girlfriend's account. We got her level 2 approval by using the following metrics: 50,000 to 100,000 annual income. That is not her income, not anywhere close to it. Liquid net worth, 200,000 to 500,000. Not until I put a ring on that finger anyway. And total net worth, same thing. So again, maybe it's not right of me to say, but I'm telling you, just fabricate your account. You'll get approval. Do what you got to do. You're a hardworking college kid. You need to create opportunities for yourself. So do what you need to do to get the approval because it'll help you down the line. Other questions I see: how do rising and falling prices of stock impact velocity of option prices? As I said, a call option will decrease in value if a stock is falling, and a put option will increase in value if a stock is falling. if, I'm not going to dive into crazy examples here. All you guys probably know about my Watch Him Trade website, where I am live trading options every single day of the week. And, you can sign up for that for a $5 trial at the website. In addition, what I think would be most interesting to those of you who are interested in options, but want to keep doing your penny stocks, and Max will talk to you more about this, is we have Max's penny stock website, watchmadastrade.com, and it's $129 per month for each of our websites, but we have a dual subscription special where you can sign up for $190. And again, before you ever get to that, you only pay $5 up front, and you pay $5 to get access for 5 days, and then after those 5 days, you can decide, hey, is it worth it for me to stick around? Because I'm seeing a lot of questions where I go over a lot of this stuff every single day, and you really learn by just watching what I'm doing. Asking how a rising price falls, asking how a rising stock would impact the option, or asking how do I know which option to buy? John, I saw ask that. I make my determination of which option I'm going to be playing pre-market every single day, and that's the type of stuff you see and Watch Him Trade. You want to know, what penny stock to buy. That's the type of stuff Max covers every day. Again, this is my platform, so on a day like each day, I have my main stocks. Tesla's one of them. You can see here I'm watching the 200 strike put going into tomorrow. Amazon's another one. I'm watching the 320 strike put going into tomorrow. Some of these I need to adjust. Okay, but for instance, Apple closed below 525. I think Apple can go lower now, so I'm going to be watching the 525 strike put going into tomorrow. All of that type of stuff is done pre-market during my live sessions. And again, this question, the strike price, that is stuff that I go over. I didn't want to make this webinar this is what an option is, because, this is all the technicalities behind them, because there's a lot of dry material involved. The purpose of this webinar was that, hear what I have to say. If you're interested in them, then, you can decide to put in the time to learn more about them. There's free outlets such as the CBOE.com website that has information available, but then we have educational content available on our Watch Him Trade website. We have a 7-chapter course available to subscribers that goes over everything such as the strike price, where if you're a member, you can see that strike price. You do a search, and you will see that it is covered in Chapter 7. So again, I don't want to spend all this time going over technicalities. I wanted to explain the basics from a perspective of, is this something I should consider putting in the time to learn? Guest asks, can you predict the future with unusual option activity like in SPY? You can definitely analyze option activity and, draw conclusions or attempt to draw conclusions based on that. So yes, options can be a great tool for trying to forecast what might happen in the future. So A-Trade, you meant what is the profit or loss amount per move? If you buy an option at 1 and it goes up to 2, have you made 100 since options are lots of 100? That is exactly correct, A-Trade. That's exactly what you have made. You're exactly right. Lambert asks, on pennies, sometimes we lose more than our stop loss because we don't get filled. Does that happen much with option fills? Options, if you put your order in right away, okay, so for instance, right here on this Apple 525 put, the spread is 274 by $3. If I put an order to sell at 274, I would get filled right away, no questions asked. If I hesitated and I didn't put the order in right away, and now the spread starts dropping to 273, 270, or, starts dropping, then I'll have to chase the bid down. But you will never run into a problem where you go to sell your option at the current price, at the current bid, I should say, not the current price, you need to differentiate between that, and not get filled. You can always whack the bid and get out 100% of the time. The thing you have to be aware of is that sometimes the spread can be wide. For instance, 274 by $3, right now, you're talking about a spread of 8.6%. But again, that's why entry points are very important. That's why I started out saying you need to be entering near support levels or resistance levels, what I refer to during my live trading as reference point entries. Taxes do not get any more ridiculous with options than stocks. They're all the same thing as far as capital gains. If you make money trading an option, it's the same thing as making money trading a stock. There's no special tax ramifications. So if I have a margin account with over 25K to avoid pattern day trading with stocks and only use a cash balance, can I trade options? Yes, you can always trade options as long as you have the approval. And I showed you how to get that. Question, how much do I use limit order versus market order? Again, that's the type of question that, it's a variable. It really depends case-by-case basis. I typically use a limit order to get in and sometimes a market order to get out. But I'm majority of the time using a limit order. The only time I use a market order is when I am taking a loss and I just want to get out right away. Any other questions before I turn it over to Max and let him discuss, just what's been going on with him and his penny stock trading? And, I know he's doing really well. And again, I really encourage you guys that are interested in what I had to say but still want to trade penny stocks, sign up for a dual subscription. Check it out for 5 days. It costs you $5. That's less than you're paying per trade, all right? And, just see what I'm doing on a day like tomorrow. See what Max is doing. And I'm very confident we have some real value. And, if you're interested in options, I can definitely get you going the right way. Everything Max and I do is always recorded. So you always have access to it. We're always posting our gains and losses, so you can see, you're seeing everything with your own eyes, just 100% transparency. We're very hands-on with everybody. And, yeah. All right. Any other questions? I'll just answer in the chat room via text. So at this time, I'll be turning it over to our residential penny stock trader, Max, aka Madaz. Here you go. Thank you guys for attending. This was recorded. It will get posted by this weekend. Thank you very much. Have a good rest of your evening.